Everyone to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host Trip, better known as Crypto ISO on Crypto Twitter. We got an awesome episode for you guys today, but lots to talk about, lots to get into. But before I get started, would you please do me a favor, smash that like button, make us look good for the YouTube algo. Also want to take a quick second to thank our sponsor Phemex, one of the only non-KYC derivatives exchanges left in crypto. Click the link in the description below to get up to $6,000 in sign-up bonus. Now, the last thing I'll say before we get started here on Tools of the Trade, we are not financial advisors, and this information is for educational purposes only. Welcome, everyone, to another episode of Tools of the Trade. Trip, my man, how you doing?
Good. How you doing?
Good, man. Good to be back in the saddle, I guess. Not even back in the saddle, right? I think we're just experiencing some volatility finally after, like a month and a half of kind of just sideways chop. We finally got our range break. Markets have sold off, and a lot to talk about today. But first, what are we doing in macro land? I think that's kind of my actually biggest question here, just because, from my point of view, macro kind of impacts things to an extent. Like we saw over the summer, the decorrelation, but it seems as though markets are feeling heavy in equity. So I'd love to get your take on that and kind of move into crypto from there.
Yeah, I mean, we talked a little bit about last week what happened kind of relative to can you guys see this? Yep. ES and NASDAQ. So what do you say? So 4630 was August 1st. So we've essentially just been trending down for 3 weeks in August, call it, right? Like that's just kind of been the downtrend for NASDAQ and S&P. If you look at what the leaders were, it was tech, AI, like chips. Obviously, NVIDIA kind of erased its gains today. I think just general consensus around the market adjusting the expectations for rate cuts next year, like what they were anticipating and now what's kind of being priced in. August isn't the best month, right? We have Jackson Hole coming up on Friday. So we're going to hear Jerome. We know that's kind of a big event because it sets the stage for basically fourth quarter as we round out the year. I mean, markets have rallied a fair in the face of a lot of disbelief like this whole year. Are these the tops on the indices? I don't know. It's kind of too early to tell. I mean, we're sitting here on the key June for the S&P and kind of sitting or trying to hold the key June on the NASDAQ. I mean, last stream we talked about how this basically like 14.7, 14.8 level could get hit. And we talked about basically 43.70, 43.80. So I think it's like markets are walking on eggshells right now into that speech on Friday, which is not surprising. And that's going to set the tone for a lot of what's to come. I mean, we can look at the dollar, which maybe now there's a little bit more relevance in this chart. Because the indexes were kind of going up while like everyone was talking about the dollar, but now like are we in a point where this is going to potentially break out, or is this like an actual 9 that's like a sell signal? I mean, I don't love the Stoke cross. I'd rather see it going down. I think this is going to be largely dependent on what we hear on Friday, right? So if you get a breakout in this, you're probably going to see more of risk being sold. If Jerome is dovish and, people's expectations were getting ahead of themselves and it's not as bad, then this is going to go down most likely. Things will reprice and equities will get bid up again. But it's like too early to say exactly what that outcome is, right? If we look at just like percentage moves off the top, we corrected 6% on the S&P, and on the NASDAQ, almost 10%, right? Those are reasonable pullbacks. But again, like when you're looking at kind of the market structure here, like was this, I'd like to hear your take on this. Like, here's your high, here's your low, here's a high, but now you've kind of like taken out this low, right? So are you starting to break bullish market structure? I think you're going to need to look at a higher time frame, but there are hints of this, right? And we saw it in crypto as well. I mean, look at Bitcoin relative to ES. Like, obviously, everything fell off a cliff, right? So Was this almost like foreshadowing of what's to come for equities? I think the bears want that to be the case. It'll be really interesting to see like what happens Friday and how the market reacts to this. So that's kind of my quick and dirty on the macro take. I mean, not much has changed really. We're seeing a continued sell off for most of August now.
Yep. And I think we know that August is usually low volatility, low vol, and just people usually fucking off until Q4. So now that we're in the back end of the summer, let's take a peek at the markets real quick, right? So you talk about the NASDAQ breaking market structure. Yeah, my gut says that since we broke market structure, that is the beginning of bearish market structure. We're probably going to see some very consistent, clean, actually, what I think, downtrend selling from here on out. And I'll bring your attention to this chart. Just to show a comparison, when I looked at this holistically the other night, and I wanted to talk about it, but I wanted to wait till the stream, just because it takes a few days to kind of digest, right? So we were in this range, right up here from, call it end of June till middle of August, basically almost 2 months. Finally broke down from this range. Okay, you can even say that we were in this range first, and then we finally broke down and made the other side of that range, whatever. 1 to 2 months range, finally broke down. We had no volatility during this entire time. Now we finally got volatility. The range expanded to the downside. Volatility expanded to the downside. So at this point, my system says that when you have consolidation, a long period of consolidation, and when it finally breaks out and it has a move, whether it's up or down, you don't fade the direction of that move, right? So I think that's the key thing for me right now is the breakout was to the downside. I am leaning bearish. I am trading as if we are starting a downtrend. Now, the reason I have confidence in thinking that this is probably the yearly top, we're going to be consistently selling down, although I do expect some relief in October due to astrology, but neither here nor there. So if I look at it from this perspective, separate into two parts, macro range that everyone was bullish, bearish, getting chopped up, finally had the breakup, and then here. So these two ranges or two structures look very similar to me, like when we were at 65 and 69K. So this structure here basically is eerily similar to me, to what we're currently experiencing. So, with that, I'm not going to draw a fractal, but, consistent downtrend seems like a very likely outcome from here on out. And we'll get into more specifics on the low time frame, but for now, I just want to talk about Bitcoin just holistically from a high time frame point of view. So right now, what I'm going to draw some lines on the chart real quick. First is, where was it? There. I think it was there. We have this low, and then we had this high, and somewhere around 17K. I think there was like a range right here somewhere, right? 1760. Okay, cool. So, and then there is the previous range. Where is it? 272-ish. Okay, so all these horizontal lines to me are, at some point, they were important aspects of market structure. Not this one, but actually, we'll leave that one there just for illustration purposes. So these are all important aspects of market structure for me. So when you broke them, you saw serious moves to the upside or downside. So now what I'm kind of expecting, I posted this on Twitter earlier, I think the most probable scenario right now is we're not going to get released to the upside until we sweep the lows. And the reason being, I think that this high at 31.7 was a marginal higher high compared to right here. So this higher low to me is not safe. This is Coinbase Spot Exchange. On a lot of derivative exchanges, this level was swept due to liquidations. So I really think those are prophecy wicks, basically saying that we are going to sweep these lows and see if there's actual demand beneath them. So I wouldn't be surprised we get a sweep below this low, maybe somewhere into even 23K, 24K, because this is a significant order block of demand or before we basically start our up only for the end of the rest of March. So a sweep below 24.7, I'd say around 24.2, 24K. A retest of this range low turned range high, turned once again resistance at 27.2-ish. Then I'd probably expect a sweep down to this 21.6 level, which is basically that range low. But I actually think we go deeper. Go up here, come down here, and then see what happens. So all I'm saying here to illustrate this is that I'm expecting very orderly selling with a lower low, lower high, lower low, lower high, lower low, lower high. So I'm expecting a downtrend to start from here. That's the quick and dirty take on that respect. Trip, let's kind of pivot to some liquidity, and then we can kind of talk about ETH and some alts.
Yeah. So to your point, I mean, we've like, for me, like we can go over charts, but like you lose the 200-day moving average that quickly and violently, you're not going to do anything for like 30 to 60 days. Just go back and look at a chart. We were above the 200-day moving average on Bitcoin and Ethereum from January 13th.
Yep.
And we broke the uptrend. Like it just does not look good. You can trade it, but all hopes are gone.
It's not swingable. Yeah. You're not going to start this up only trend.
Yeah. It's not happening. And so you had a shot, right? Like we had identified like the liquidity pockets on ETH, and we had looked at them on Bitcoin. Like, dude, it went like $3,000 below it on Bitcoin.
It didn't wick through. It didn't get bought up through. I think that's the key point to get across, right? Like we talked about, was it 2 streams ago, our levels at 23 or 28.2 up to like 28.8 level, whatever that got front ran. We were talking about when basically that level,
the 200-day moving average was like.
So when that level got front ran, that we were kind of talking about, that we get front ran, was the bottom in. And when we tried to bid that and it failed, that to me was as clear a signal as any that when you have what you believe should have been like the higher low, okay, it got front ran at 28.8. We were talking about 28.3, whatever the case was on Bitcoin specifically. Liquidity on ETH was a little lower. A point being is, when you have these levels that you kind of have this preconceived notion, this should be around where support is. Okay, it got front ran. Let me see if I can get in. When you try to get back in and then the trade doesn't work out and you end up sweeping those lows, that's an invalidation of the thesis, right? That like this is the perfect, or not perfect, I should say, but like this was the ideal spot for price to bounce, and prices didn't bounce, right? So you have to keep that in mind. So the thesis you originally had didn't play out. So, a failed bullish breakout is an opportunistic bearish setup. So that's the way we kind of have to pivot, or at least I had to pivot the last week or so to kind of get a take that, okay, we just broke down a few days ago. We are definitely starting to trend downwards. How do I get into the market? Well, I'm looking to trade it as a bear market, right? Call it a bear market, call it a downtrend. The terminology doesn't really matter, but we're looking to trade lower before we start, making claims to go much higher.
Yeah. So, I mean, we can just look at kind of the Bitcoin chart, right? We'll get to liquidity and stuff, but like, this is where, like, this is 27. It was like 27.1 or something like that, right? So this was the first liquidity pocket, like on the trend line, call it like 28K, right? And that was kind of like, all right, this should hold because this is your uptrend from basically, let's just say the start of the year, right? Here, you broke above the 200-day moving average. It's January 12th or 13th, okay?
Yep.
You bounced off it here, so then this is now your uptrend, like basically that you can kind of look at. I mean, this isn't perfect, but like we had the distribution, okay, top of the channel down to here, bounced literally like perfectly. Did not hit the 200-day moving average. So you're like, all right, like we came up here, we made like barely a higher high. And then this is where you need it to hold. Now that this just like nuked through this and we're below the 200-day moving average, like look at like when we break down the 200-day moving average, like, yeah, there are fake outs, but even this was from September 19th to I guess October 1st. So maybe it's a fake out. Like maybe go back up, but like.
So it looks very similar to November, dude. So like that's what I was saying, like the structure from 65 and 69K. If you even look at the MAs there, right? Like you see the red MA, you broke below it, you wicked below it throughout like 41K. You had that liquidation wick. Yeah, you got back above it slightly, but that to me is that 27.2 retest we just discussed, right? Before it just downtrends down.
Right.
Because look what happened when price lost the red MA over by November, October, like 69K. It just went down only after that.
Right. So this is very bad for me. Like it just becomes like this idea of a new high on Bitcoin seems like very far fetched now, given that we've lost this. And so now you go over to ETH, and I mean, I had talked about these megaphone structures, like 200-day moving average. I mean, it's very identical to like what we just looked at on Bitcoin from where your uptrend is. mean, yeah, you wicked through it here. This was a daily 9, which was nice. But like there was no remorse here. Like some derivatives exchanges went to like 1440, like all the way down here. So for me right now, it's very similar to like your point is like we're probably in a downtrend. I'm not super interested in trying to like trade Bitcoin and Ethereum prior to anything around Jackson Hole. I still think that's like very macro driven, but losing the 200-day moving average and the uptrend was a big one for me. So now we can go look at actual like liquidity, because we've talked about the 1 month blocks on Bitcoin a lot. And like to your point, well, here, this is the next one down 23.4, like 23.5. I think this is like a weekly key June.
Yeah, so I want to show that real quick just to touch on it.
That's you had drawn out like basically an edge to edge, or like a you got to get back in the cloud type.
You got to get back in the cloud. And the way I saw that happening, the best case scenario I saw that happening is you would come back here, you would consolidate in the key June, and then right around here is where you would attempt it. And that's kind of November, October to me. That would be the best case scenario, that you'd have this attempt to get back in the cloud and trade up to 40K. I'm no longer in that camp, but I will, consider changing bias if we do really hold this 23.6 level. But gut says we will not. But yeah, continue, Trip.
Yeah. So, if we look at the 7-day on Bitcoin, we can, oh, sorry, I'm like looking at your screen. We can look at like, look how close it is to your point of running the lows. Like this will take you to 25K. Like if you start hitting this liquidity down here, right?
Yep.
And then top side is, what's everyone talking about? 27.2, 27.150. You'll exhaust that because look, it's like $1,000 gap to get to the next one, right? So we'll look at the 12-hour, and then we can actually look at the liquidation levels itself. Last time I checked, there was like 10 billion plus in shorts or something. So there's a bright one at 26.1. Again, you can come down and start to take out the lower 25s. So 25.3. You're kind of in between these pockets, right? And this will give you 26.4. So 25.4 and 26.4 are the lower and upper bounds of like your near term liquidity, with like 26.1 being bright yellow. So if you're looking, and I haven't looked at it on a chart, I don't know if that's a range like that prices put in. Typically, like when you get a giant nuke like this, you can just look at the past in the chart. It'll just do this for a while.
Yeah.
And like
hop around to drive everyone crazy as they try to like scalp the long. That just won't come.
Yeah, and so it's very hard to figure out when the consolidation is over enough to where you can try to buy it and trade up into one of those levels, I guess. Yep.
But I see even just on your screen, all the green dots longing these lows here, and that's why I kind of took that scalp short. Seeing all these top or bottom longers trying to be bottom longers, and seeing that there's liquidity still much lower.
Wait, I could have sworn like yesterday there was like 10 billion or something. Maybe I looked.
There was, but the longs kept piling on the 25.7 move yesterday. And that's why they've been kind of destroying the delta.
So, yeah. So the way I would look at this is I would try to determine something from the cumulative lick delta and notional amounts. One, a lot of people got liquidated. There's less participation after a nuke like that with the volatility. Really, it happened in one
open interest flush
candle. Yeah. So 1.4 billion in shorts on Bitcoin is like not a lot at all, right? If you're starting to just go sideways, or let's say you go down and you hit that near term liquidity, and you start to put in bottoming ranges, and this is really starting to get higher on the short side, and your ratio is like this isn't that favorable, but it's noticeable that shorts are getting off sides. I don't know if you're necessarily going to see it in funding and all that, but that's when I would start to look at any sort of long, right? Right now, just there's not anything attractive of trying to trade like Bitcoin right now. And I would imagine if we look at ETH, it's probably similar. So let's see what the liquidation levels are like on ETH. And this is like a lot of on the fly analysis, just because one, I've been playing on chain. Two, there's nothing really jumping out the page on me here. So you had a bunch of people try to long 1660, but like what was it, 417 million longs, and now you have 1.7 billion in shorts. It's more than Bitcoin. Is that because ETH BTC is like, well, look at that. It like tried to get up to the top of the trend line, and now
it's kind of retracing it.
Yeah, kind of failed. But back to liquidity. We'll look at the 1 month, we'll look at the 7-day and the 12-hour for ETH, because we can see where, things went south. But let's start with the 1 month, because the 1 month liquidity pocket at, call it 1770, right?
Yep.
Hold on, was like the ticket. And that was around the 200-day moving average. It was the trend line, like you name it. Like everything was there. And it was this one, right? Like this is what we were waiting for. And when I talk about gaps, oh, sorry, hold on. When I talk about the gaps, so like this was the pocket, right? Then you had a big gap, like down to basically 1700. Not only did it go through that, it literally hit the bottom one at almost all the way to 14.6.
Almost, it was like 1500. I think it stopped.
Yeah. So now look at this. This is so you're gonna come down here and hit this again, like, and that's maybe your double bottom or something. I don't know, but you still have this up here at 1900. Like we didn't touch any of this, but
I know that 1905 liquidity. If I ever see that spike, that's just the insta sell and walk away.
1940. I mean, I think that was like a monthly. I forget which level.
It was the monthly or the quarterly open, I think.
Yeah. So the monthly is not telling us that much, because we nuked through all the important liquidity. Like that was, I was really shocked. But the market will humble you and shock you. So near term, here's your 1610. So 1600 basically. This seems feasible. Maybe you get this and you start building shorts and you're in a range at this like 1600. 1600 might be round number level that people decide to bid, right? Because you do hit a gap all the way down to 1535. Now above it, you're decent amount up to like 1730, like 17, basically where you broke down the 200-day moving average, right? So that's a similar thing to what Bitcoin could do back up into that, reject, and ETH could probably do something maybe similar to that. And then if we look at the 12-hour, we can see like near term, maybe there's a range that we would be playing in potentially. We'll zoom in here for you guys. Let's see here. Yeah, look, like when you're just smack in the middle of this stuff, it's like there's really no edge. You got to wait for something to get hit on you. So here, 1598, 1600, maybe 1600's a buy. Okay, that I would look at that. I don't know. I haven't looked at a chart. Maybe you could help out with that, Zorn.
Yep.
And then if you tap this, then maybe build the shorts up and you're going to go for up here, right? This is your gap before you start hitting like 1700, but your pockets are like 1660 to 1600, right? Or maybe you'd only get to like 1650, but that's how I would look at ETH. I just don't think there's been a buildup enough of like shorts to squeeze. People are very.
I agree with that. What's that bottom 1500 basically liquidity? The gap goes down to.
Oh, here.
Yeah, after that goes down to 1500.
1564, and then 1460 starts at 1500. Yeah.
Okay. All right. So with that said, I want to talk about BTC real quick one more time, just to get a take on what Tripp just talked about on ETH side. So from the lower time frames, we talked about these two levels, the 27.2 and the 24.750. Just before we dial it in, I want to take a second to highlight this little order block that I've been looking at for months now. So this little doji we had on end of February, is like 23 or 22 to 23K, I think it is. Yeah, 23 to 24K, sorry. So 23 to 24K, this has been like an untouched order block I've had my eye on since March. So, on the daily, we're talking about that sweep, and then I'll zoom in here to the 4 hour for a trade. So, Trip, you're talking about maybe waiting to get more liquidity buildup for a squeeze. I don't think 1600 is a buy. In fact, I don't think anything's a buy until BTC sweeps this level and comes into actual demand here below 24,750. So, this is like maybe the long for me, like reclaim of this, or trying to bottom pick somewhere in this little range here. So until I see prices sweep
So
24
what
750.
percentage down is that on
So
BTC? Because that's the monthly
so
block.
that's at least, yeah. So all the way down to be like a 6%, 7%, almost 10% from here. I guess if we went all the way down to 23K.
So where's ETH? So
ETH
you'd be like
is
1530.
Yeah, so I'll show you that in a second, actually. So Alex says, can you check the 3-day time frame? That's what I was just on, my friend. So this is, the 3-day time frame. This is the order block we had here on BTC. Coming into this area just makes the most sense to me. Before you actually see any demand come in, is we need to somehow sweep this low, come into here, and then maybe attempt here. This is where I'm expecting resistance, though. I think a lot of people are going to be waiting for 28.5, this underside, but to me, this range right here is the range we're in most of the time. And the fact that, we gapped up through it here, we gapped down through it here, we're going to probably trade back into it. So I think somewhere around here, which is the previous range low, is going to be that area.
Why don't you just throw a fib on from the high to that block back up? It's like a 61.8 or like a 50%.
Oh, you mean from the top to the block?
Yeah.
No, so yeah, that is the key June. So that's what I was trying to say is, that on the 3-day, that's the key June. Yeah, let's get specific. Let's be technical analysts, right? 15.5. So yeah, 23.6 is that.
That's also the 200-day moving average.
Yeah, so there's a lot of confluence as prices start nuking. For this midpoint, this 23.6 mid-range, whatever you want to call it, as we nuke down.
Nuking right now.
Nuking, boys.
6,
I love it.
1500.
I love it. 24.5 should be a nice move. Staring at the P&L. Don't stare at the P&L, guys. But yeah, so going back to your point on ETH, I don't think 1600 right here is a buy, maybe for a quick scalp or something. But I really don't think BTC is a buy until it sweeps that level. Ergo, let's look at ETH for a second here. This is something I drew out in the Tools of Trade Telegram a couple days ago. These levels here, I'll get to in a little bit, 1,900. But the 3-day block was around here. That I think we came into, or was it? It was right here, actually. Oh, we are nuking. I like it. But
did something come out?
ETH is also nuking, so that's actually interesting. So to the point on ETH being a buy, I think 1,500 would be the first area to consider.
You just hit the 12-hour pocket on the ETH thing that we just looked at. Pretty quick.
Oh, really? That's funny.
Yeah. And then so BTC 12-hour.
Yeah, why don't you show that pocket actually being hit if you can, just to give people a there it is.
So so this is my point. Under 25.3, near term, you the gap down. There's a gap to 25.1, so you're just gonna have to start hitting gaps. Where did BTC just go? Did it go
25 to 25.3?
Okay, so then, yeah. I mean, I don't know. I wouldn't just blindly bid it, but just based on this, that you need to hit the gap below, right? And so if we're looking at ETH on the 12-hour, this is how you can kind of develop your own analysis around ranges outside of using a chart. For this, where do we just go? 1596, right? So then there's a little bit of a gap. It can go all the way down to 1568.
By the way,
what?
The chat is blind bidding since we said not to bid these levels, which is respectable.
Well,
but I don't think
there's an argument to be had for this area on ETH just based on that, and BTC for near term. We can go actually look at the liquidation levels now to see how they just got affected. And
that's actually a good point. Yeah.
Look at this, dude. BTC 278 to 28, right? This is what I'm talking about. You just
yeah.
That's
Is that
ETH.
ETH or that's ETH? Yeah, I'll show BTC.
So ETH's now 4 billion. So this seems like a reasonable place for a snapback. And BTC is
It's 4 billion as well, with Lick right above there, 26.6. But I think that's where we're going to tap and then head back down.
yeah. Oh, you mean 25.6? You mean?
Sorry, yeah, 25.6. Yeah.
Yeah.
I think people want the retrace of 25.8, but I just feel like it keeps
So
going.
24.5 is your bottom lick. But like here, I mean, you just added 3.
You had 23.9 yesterday on there, which is weird that it's not showing up, but I think it probably got moved.
I don't know.
I'm
I'm going to say that
yeah.
near term, the 25.3 was the bottom and the 15.97. And you'll probably trade a small range now because that's the 12-hour liquidity pocket that was just it. We literally just talked about it.
Yeah. No,
and
no,
now
that's
you
the
just
fair
put
assessment.
in 4 billion plus in shorts. You know, it's a predatory market. Like it'll probably bounce a little bit and everyone will get excited and then it'll bleed down again.
Yeah. So that's the point to get across the right. It's like, yes, you can scalp this, but be very greedy to get in and out because you're not playing for a break in market structure to new highs. I think that's the point to get across, guys, is that if you're trading this, you're scalping this on, if Josh Nomics and Koala are longing here, I'm sure they're setting tight stops and they're trying to play back to their.
Oh, I didn't look at the chat.
Yeah. That's what Josh said, actually. I'm going to ride this bounce to the top of the range. That's the point to get across, guys. If you're trading this ship price action for the majors, you are basically trying to catch scalps. You're being greedy. You're not swinging. So yeah, maybe this is the bounce spot.
1776, huh? That's all right. That was the level we broke down from. So, all right, we got some optimistic people in the chat.
Fair.
I like it.
I'll take it.
I'm trying to see. Yeah, 16, 10, 25. It'll be interesting to see how this.
I'm still bearish. Like even with this little bounce here, I still think we just keep going down. Like that to me is like a trigger to get short. Same way we had like, I don't know, when I see here, let me show this.
I don't think it's even like a. So first of all, relative to where Ethereum and Bitcoin were, like this
to me, these candles, when you see these like wicks down, and it looks better on BTC actually. That to me is almost like an insta short. This is like testing liquidity. This candle here. I've been fucked by this candle so many times in 2019 and 2020 that it's ingrained in my head. When I see these little like spinning top, oh, it's a liquidity pool, like it's fine, it's gonna start going up now. No, that's just a trap. That's literally just the biggest trap. That's the psyop, and I've seen it happen so often where people decide, this is the long, put my stop below here. Okay, well, licked under. Let me get back in, and then you get this, and it starts the downtrend. So this to me, this candle right here, this that we had,
ETH will just go to the like 1640 to 1650, like that's basically be a dark mall candle.
Yep. But the whole point is like that's kind of the trigger for me to get short because I'm assuming we're going to start very orderly price action to the downside. So, I took a scalp on BTC. Where is it? Whatever. On 25.9. But point being was like the stop goes above the spinning top candle because it shouldn't get it back above this if we're going to start orderly price action to the downside, right? Like this should be your high and this should be lower high. Lower low, lower high, lower low, lower high, et cetera, et cetera. And that's kind of how I see the market going right now. I am max bearish still and deciding that we have much lower to go before higher. I do want to take a quick attention away from the price action to talk a little bit more macro, or a little not macro, but at least higher time frame. I posted on Twitter the other day that I am expecting, going back to the yearly open and maybe potentially seeing even new lows. And the reason being is just because, this seems to me until we reclaim the 30K level, that's the pivotal level for me. Until we reclaim that, I'm going to assume this was just a bearish retest, which I didn't want to assume at first, but this was a bearish retest of, the previous cycle lows or the previous cycle higher low. And we kind of bearish retested that and we're going back lower. So the first area of interest that I've always just like, if we are blessed with this, right, this monthly order block, I think everyone and their mother would hopefully buy this because this is as bullish as it gets. But if you look at that on a weekly level, we usually have these range of candles right here. And then the yearly open was around like 26 or 16.6 or something, right? 16.6. And then this low here to me is no longer safe now because of that. So like you would have, we talked about bullish market structure many times over the summer and over the spring,
right? You had the high, then you had the higher low, and then you had the high, and you had higher low here, and then finally up again. So the fact that we are now made that marginal higher low, and then marginal higher high, this higher low is no longer safe, and I really do expect this to come into this 19K level to retest it. But realistically, yearly open 16, 17, 18K, that seems a viable target for me. Now, the reason I talk about, potentially 13, 12K or lower, maybe even 11K, the reason being is just because I can see the way that price action is unfolding. The ability for price to not break above 31, 32K here, and the marginal higher high that was based on the BlackRock news is to me just very bearish. I don't think we've done enough accumulation to actually start a new bull market. So if we haven't done enough accumulation, what does that mean? Well, that means we need to do more accumulation. So let's just say this is top of our range and this was the bottom of our range here. I really do expect some sort of right chop. Like you have the whole Wyckoff scenario, do a bunch of this shit, and then eventually go up. When you're doing a bunch of this shit, though, I do really think that you can sweep this low for the classic quote unquote spring that you get down to this monthly order block before going higher. So a little messy, but you guys get the gist of that.
Yeah, it'll be choppy. It's still like very much in and out trading around those liquidity levels, I think.
Smash the likes, guys. Thank you.
Smash the likes, hit the like button. So yeah. We can look at some altcoins, even though those
yeah. So, well, actually, let's take a second to talk about that, right? So when we just talked about the market going what we believe is a downtrend, at least I'm claiming that I think we're starting a longer term downtrend. The yearly high is in. We're gonna go lower before we go higher. So point being is, so what do you do when you know that the market's kind of going or resuming down only? Where do you find yield or returns in the space, right? The majors are pretty much high beta to Bitcoin. We've seen them just nuking twice as hard comparatively. So what I've noticed as of late, and this is in part due to you, Trip, and then some of our other friends in Fishing Club, is people are seeking yield outside the normal, leverage trading avenues. So lately it's been on-chain stuff. The only on-chain thing that I really first dabbled in over the summer was Harry Potter, Obama, Sonic Inu, which, as we know, made a new all-time high to 200 mil market cap, 20 cents before it put it in this local top. But yeah, Trip, I'd love to kind of get your take on what you've been looking at in terms of the on-chain stuff and in terms of like how you approach the market now that it seems like it's gonna be a dull market for the future, but I don't mean dull in the sense that it's not gonna have volatility. I do think we're gonna have a lot of volatility now that it finally expanded. The range broke down, but I do think it's gonna be a lot of down only, right? So it's like, how do you involve yourself in down only when price is already down, right?
Yeah, I mean the on-chain stuff is really interesting because one, the regulatory landscape and everything going on with centralized exchanges just kind of positions it to be a favorable environment to play in. I mean, it's super PvP. It's like trading on high leverage because the moves are so crazy, and there's like so much interesting analysis like that can be done around holders, wallets, like the whole thing with like a lot of these coins and how there's basically a buy and sell tax. Like I don't remember that when I played on chain like a couple of years ago. So there's always some crazy new thing in crypto, right? And so if it's a double-sided one, then companies are making a lot of money. Like you have to look into that. I mean, there's a bit more of like under the hood analysis of seeing like what is the what are the tokenomics basically, right? We're not necessarily doing that with the liquidity theory, but there's a time and place for it. And if you were on chain, like you are making a lot of money being early to these things, right? But there's like a tech side of it too, like understanding how to use bots, right? Like snipe contracts early. For me, it's figuring out what are potential narratives, like, and gambling has always been something that just went hand in hand with crypto for me.
It's still the best thesis in crypto, right? The best use case. Sorry, the best use case in crypto.
Better than the social fi thing. Like the friend tech thing is extremely interesting right now because there's people that had talked about this happening. I mean, I remember I was buying like a token like 3 years ago called Rally. Like I'm pretty sure like Chris Dixon was part of it, and that was like the first iteration of social tokens, right? It was like creators can monetize through on-chain and monetize their fan base, whatever it was. It was like a Uniswap thing. Right now you have this friend tech thing, which is interesting. Probably morally wrong, just because.
It's really just an iteration of Irene Dow and Marin Dow. That's the way I look at it, right? Because I think we both know, at least I shared this with us in Fishing Club like several months ago, is that GCR back in 2021 talked about, social, being able to bet on social tokens and people betting on the appreciation of an individual, not a company, as a share or as a stock or as a cryptocurrency would become a thing eventually. Now we saw the first iteration of that with Irene Dow when she basically launched an NFT gated Discord community that you need to mint the NFT, and then I think it did like 10, 12 ETH, some crazy numbers. And then you had a bunch of copycats, Erica Dow, Marin Dow, etc. That was at the end of January of last year. And now, we're over a year and a half later from that. This is the next iteration of that, Frontech, right? Buy and sell shares, or now it's keys, right? And it's like, what's the meta there? And we can talk about that if we want. But point being is like, this is just another iteration. But yeah, gambling has been the best use case for crypto. So continue on the on-chain gambling stuff, Trip.
Yeah, and this whole tax thing, right? Like, it's an interesting way for these, I wouldn't call them companies, projects, to essentially generate cash flow. Like, if they bring a lot of volume and liquidity in and people are flipping these things around, like, they're making money on a daily basis that, they don't need to go out and necessarily get funding for things, right? And a lot of stuff that does really well on chain is starting to almost catch the attention of like traditional VCs, right? Everyone's looking for the
Yield.
momentum type trade, right? So we've had these interesting meme tokens because they have like the power of the cult, and just that's always been like a very symbolic thing in crypto. Now you're starting to see the SocialFi stuff, the gambling. There's been a bunch of different metas that we've kind of cycled through. I mean, you look at Unibot and then look at some of the other offshoots of that. And so the Telegram bot trading. So it's like, what's the next thing? I mean, there's something called SPX 6900. Like now people are making meme like index tokens, or just, so there's no shortage of innovation, whatever you want to call it. So
it's just hot ball of money rotation, right? And it's like,
it's a
what's the
hot ball
next
of money
narrative and meme that's going to kind of proliferate, right?
Right. And so when you're looking at these things, it's like, how do you do quick and dirty analysis and say like, okay, cheap market cap, what's the rug percentage here? Maybe do a little work on like who the devs are, try to find that out. Like, is this going to either play into an existing meta narrative, or is it something that's up and coming that you are trying to get ahead of? And then obviously like it moves really fast. I mean, we've seen coins do like 10x in a weekend more. So that probably could
irrespective of the market conditions too, right?
Yeah,
like
yeah.
Bitcoin
Like
could
I'm
be
looking
nuking, and a lot of these
the
on-chain
nuking-
ones are going up 5x.
Right. Yeah. I mean, one went down like 58% today in one candle.
But that's the thing, right? When there's no liquidity on chain, that's what happens. Someone cheats the whole chart with their entire bag, and there's your negative 50% candle.
Right. But that's opportunity for other people. Like whatever, they move money around. Person was probably in super early, and they flipped it into another thing because it's just constantly flipping on-chain coins into. Was like, all right, maybe you take out your initial, right, and then you're going to put it somewhere else, right? That could have been a lot. Who knows? But the point is like the on-chain stuff seems to be like it's going to be in favor because of the regulatory stuff, and also the majors probably won't see any huge activity until you start to get some of that, not clarity, but like the dates coming up for the ETFs and whatnot.
Yeah, you need a catalyst, right? So to your point on that is because the majors are doing fuck all, and the market is still PvP, retail is not coming into the space, right? Like there's no new fresh flow of capital. So everyone who's just been sitting in their bags, who either, maybe the whales who bought crypto or ETH or BTC at the lows, they've just been hanging out with their bags, getting bored. Now they're deciding like, what can I do that's fun, right? And then the remaining 69 of us, on crypto Twitter who are all trading on leverage on derivatives exchanges, like, well, I'm getting a little bored of this. Like, let me see what else I can do. And they start looking on chain. They look for yield. And I think that's the point to get across is when the market's doing nothing, the market's very like quiet, people search for yield wherever they can. And lately that's just been on chain, right? So We talked about last stream, Harry Potter, Obama, Sonic, Inu. This bad boy, this is putting in a local top here, obviously, at least in my opinion. 200 mil market cap from sub whatever, couple hundred K, whatever the case is. And these are obviously jokes where I told Nick to buy. At least I didn't tell him to buy up here. So the point being is, like, this is a meme. This is an iteration of a meme. People were interested in buying this because it has mimetic value. So if you go down the curve, this is an interesting one. Link. I don't actually own any of this yet. I just saw this like 40-50% candle today. It's supposedly very similar to the Ohm Ponzi, where but it's like the Ohm rebase Ponzi, where it like keeps paying you yield or keeps dishing out ether words. I don't actually know. This is not financial advice. Do not buy this. This will probably go to zero. But the whole point is, like, there are different narratives and metas that are coming out. So, trying to regurgitate old metas and narratives, like, okay, now we're talking about the Ohm Ponzi again. Okay, well, some people didn't participate in Ohm, so now they're trying to play this. You have things like OX, which is Suzu's exchange, right? And like, why did they do so well initially? Because they were listing every type of perpetual swap, taking the FTX approach, list everything and anything as quickly as possible, and just try to attract liquidity. Because, guys, keep in mind, this is an attention economy, right? There's no one here left but us 5, 6, 69, 500, however many of us are left. There's no one new in the space. We're all trying to innovate by stealing each other's money in whatever avenue we can. So right now it's on chain.
I mean, you can still play the derivatives market.
Of course, but you have to keep in mind that it's a scalping game. You're not playing for these long swings, right? And any trades you're taking have to be very calculated, because round tripping is going to be a part of it. At least we do see volatility now, so I think that's a good sign that scalping some of the majors are going to be a little more promising than they were the last 2 months. But to that effect, I still think you're scalping hopefully to the downside, because I'm assuming down only, at least until October, most likely till the end of the year, until like you said, Trip, those narratives about BlackRock, ETFs, etc. Maybe we'll see narratives around the ETFs come around. Who knows? But yeah, it's kind of the quick and dirty take.
What was the moon theory? When's that?
So October 14th, there's a full moon or something. I don't know. Maybe Nick can chime in here if he's still watching. There's an astrology date, October 14th, that is supposedly a market pivot point. And I'm assuming it's going to be like a big nuke and then potentially a buying opportunity. And then unironically, October 17th, we have the second deadline for BlackRock's ETF approval. So it'd be very interesting, if we got this giant nuke on October 14th, we bottom out for a day or two, and then, ETF gets approved October 17th, and we see up only. I'm not in that camp, but to that extent, that's kind of what I have there. All right, let's do some alts before we wrap up here. What do we got in the chat?
Gosh, it's full of jokes today.
It really is. Let's see. OP. All right, you want to take a peek at OP liquidity, Trip, and I'll pull up the chart?
We'll look at it. We can look at the OP. Let's see what we got here. I'm sure a lot of these alts are pretty red, unless people have been trying to buy these, but I mean, we'll see exactly.
So I see an interesting setup to OP already. I'm curious what the liquidity is going to look like here.
I mean, do you just map out all the yearly opens on these things? Have they been hit? Jesus. OP is not like, people are not really short this thing, huh?
No, they are long. And that's actually an attractive potential short setup I'm seeing here.
38. I guess if you came up here and started to, 153? Where is it now? I have not even pulled up the chart.
It's 153 right now.
Okay, so
it's like 153 even, actually.
156. That's a big one. So if you get a little more on ETH and BTC, I guess it really depends on how they play out. Unless OP Bitcoin is like something special. I mean, what does the chart look like?
So the chart, interestingly enough, I kind of see this as a potential short setup coming into play. It had some strength. It hasn't kind of swept its Monday low either. We did sweep the Monday high earlier this morning. So, potentially, depending what BTC is going to do. See, I see these type of wicks, and like a lot of people are like, oh, that's bullish. You swept all these stops. Like it's probably going up from here. I see this as like the
Okay,
opportune
so
time to short.
156 is that huge lick up top. You'd be retesting.
So
Monday
that was
high.
yeah, that's what seemed interesting to me. If you get a retest of this Monday high, you
I mean,
break
you could put your stop like
right above the deviation, what you think is the the weekly high or whatever you want to call it. And
Yeah.
then you're targeting the Monday low. So let's pretend you're trading the licks 155 to or 156. Maybe you be a little more conservative, 158, and then you're playing to the Monday low. These are some solid risk reward scalps potentially. It really depends on what BTC is going to do, but again, my theory is BTC is going to go lower before higher. So if we get this type of move where you get these licks, it's a retest of the Monday high. Your invalidation is above the deviation of the Monday high. It's as good of a short trade given the market structure of
what's the
in
monthly open?
general.
He said, nah, resting lick right near monthly open. Chaser.
161
EM. Yeah, I mean that would you'd be getting these. It would.
Okay, that's actually fair too, and I'll tell you why. 161, I do agree with that, just because of this high here. I would like to see this tapped or swept, I should say, for like a swing short potentially to trade it back down. But I think you can have two plays, right? So the one would be like
I guess
you just mentioned.
where are you putting your stop on that? Above this candle?
So for this is like the scalp I would take within I guess the weekly intraday short. But if we're talking about potentially a swing short, if you got above that, that monthly liquidity we talk about, the monthly open, right? I think it's right here somewhere. But what's the monthly open? Let me mark it out real quick. Right at 1614. So if you got up again, yeah, sweeping this high, it's basically right there. So if you came into this high here,
I guess you wait for it to go back below, and then
wait,
stop is after.
and then your stop is wherever that deviation is. Or, I mean, I wouldn't blindly short this. I don't know where you're going to stop at, but this would have to be the swing stop because you're swing trading for lower.
I mean, 161 is like top big lick, 3 million.
Okay, so let's say you get 161, and then you're putting your stop above 19, and then you're targeting lows. That's how I would trade it. Might be too aggressive, but something of that nature seems reasonable. Sweep of these lows. But again, yeah, you have to wait to see what you get, and then you see if you can tighten it up. I think you can actually probably trade it back down to $1, or $1.06, $1.05. These are all equal lows to me. This was like a liquidation cascade, but like this seems like something that would be retested.
I guess we'll have to consult with XO on that one.
That is his fave one. Next is Rune. Yeah, pull up the Rune liquidity because it swept something last night, and I was waiting for that sweep. And that's kind of, I'll show you. So this sweep right here, this setup right here, where it sweeps here and then comes back down, and you'll see that right. This is a daily chart, and I'll show you this on Rune. That was an hourly chart, and that's what I was looking for. So yeah, you actually had this weekly, monthly open. But let's turn this off real quick. This level right here was what I was waiting to get swept. We came right into it. We rejected. I wasn't behind the computer, unfortunately, so I didn't get in right away. 175.53. Could have put the stop here. I put it above here to be safe. But that would have been, the deviation above the weekly open, weekly high, or Monday high, I should say, and then just down only, right? Been a good trade ever since. What's the liquidity looking like here? Because I'm getting itchy to take profit, but not really, because I really think we get the yearly open on this thing, which is like $1 right there.
There's like 40 million in shorts, but people are kind of long it. But I mean,
yeah. So this is the yearly open on 274, and I just see this as a logical target, especially when I throw an Ichimoku.
$1.42.
$1.27.
Okay.
So from the high
yeah, I mean,
because that's your yearly open. This was your blow off top. I shorted a little too early here. I did catch one move, and I shorted again, thinking this was a top. Got squeezed there, unfortunately, but didn't get slipped too hard. This is a blow off top. I see this. I'm like, okay, I want to short this thing to 0. Wait for an entry. We had that entry up there, and now it's down below. Yeah, I think this probably bottoms out 127, maybe even 117. This area, yeah.
So you think Well, it could just sit on the Kijun Tenkan for a bit.
It could do the mean reversion, but I think because right here, if you'll actually notice, it tapped it on the blow off top. It tapped both the
Oh
Kijun and the
yeah,
Tenkan here, so that was the tap, and then you had the actual move up higher.
yeah. Kijun's
So
been pretty good. I mean, we lost it on BTC and ETH, and then it's like, okay, that was like the start. Like we lost the 50-day moving average. Like it started to get pretty dicey, and then these are daily charts basically. So you lose that on this.
I like this hourly.
Yeah. What?
I was saying I like this hourly candle. It's just straight up down 5% nuke.
Yeah.
But yeah. Okay. Next one. Let's see what else we got. OP's been a slut all week. Yes, it has. Wicks get filled. They tend to. What do we have here? BNB. Oh, this is interesting. I think SC is still in his short here. BNB. You want to pull up Lick for that, Trip?
Yeah.
So let's look at it from a really high time frame for a second. I'm gonna throw in log real quick. So
back down to 1600.
Yeah, I knew that's just I'm bearish there. But anyways, so in the 2018 bear market, BNB was the first altcoin to actually break out from its downtrend and start going up. Before the rest of the market. So the market bottomed in like December, I call it. It was like 3.2K. But BNB started making new all-time highs in June before BTC did any of that. BTC was at like 13K in June, while BNB was making new all-time highs. Consolidated, and then eventually had this God candle from $44 to $368. And it's been holding that God candle ever since, right? It closed at 210, and we are arguably now below that. That's a big monthly level to me. Now, if you break it down a little further, the past several weeks, we were consolidating in this 230, 240 range. We finally broke down from it. And now, we're looking at, what was it, the monthly or yearly? I think SC put a chart up on that. It was like the 12-month chart sweeping this low at 183, which just seems very likely. I expect a further retrace. I'm not as bearish as Capo, of course, but this to me seems like it broke support, it broke this trend line, whatever you want to say, broke this trend line. Seems like this was consolidation. 4 days of consolidation before resuming the downtrend. So this is a bearish asset. Trip, what does the liquidity actually look like before I keep just blabbing about the high time frame? This is going down, so I think that was the point I was getting at.
Yeah, I mean, it's interesting. Look how many people are trying to long this.
How many of those people are CZ, shouting 4 into the order book?
Yeah. But, there were at the peak 360 million in shorts right here. So it tried to squeeze up, and then it's selling off again. And so 220 million in shorts. I mean, I think it's like, all right, if you think Bitcoin and Ethereum are going to go up to 1650 and 26 whatever, then this probably squeezes. If you think that was a fake out, they're going to go down, then this is just going to continue to go down. Like, you want to see red on a red delta. You don't want to see every single person trying to.
Yeah, you want to see the opposite, right? Like, you don't want to see your position on the chart. Essentially, if people are doing what you're doing, I mean, it's probably a crowded trade, and everyone's trying to be contrarian in a clearly trending market. So if the trend is clearly down after breaking that consolidation we just looked at, to long it while everyone's trying to long it, trying to catch that bottom reversal, whatever the case is just usually a very unwise thing to do.
Yeah, I mean, you want the aggressor to match your cumulative lick delta.
Yeah.
So
you want aggression into support and then for one party to get offside, right? Like, you don't want buyers to step in at support with aggression and then not move the price a lot, because then they get tired.
That's margin longs trying to buy spot sellers.
Yep, exactly.
Not a good thing. I guess the funding rate on it, though, is kind of interesting for BNB. If you look at, if we're looking at funding rates, just quickly, you guys see this?
Oh wow, yeah, it's pretty negative. Decent negative for a major of that caliber.
ETH slightly, XRP. We can just kind of look at this. BLZ, this thing's like always negative. I feel like the last stream we looked at this, it was negative too.
Yep.
But Matic, Rune. Oh wow. I guess it doesn't really matter though, because it's just getting crushed. But this is like something that I would actually look at and start to pay attention to, as if you just start, if price isn't like going down as much and you're building red deltas across the board and these funding rates are starting to telegraph potential squeezes, like, and they're just squeezes probably, but they're tradable squeezes, right? Recipe you want to look for is basically, we just talked about the aggressor matching the delta, right? So on the short side, you want to see the cumulative lick delta building to those higher notional amounts, and then you would want to see negative funding, and then maybe you can start to put in some TA, and like maybe it's at some key levels, and that's how I would look at trying to play any squeezes kind of on any of these altcoins, right? But yeah, so coinglass.com funding rate, if you guys want to look at that. So yeah, you're taking a view on the market with BNB here. I don't think it's going to do anything opposite
Different
market.
than, yeah, exactly. I think the whole point with the majors is they're supposed to be high beta to Bitcoin. So if we're assuming Bitcoin's going down, yeah, BNB is probably a decent short. I think the point that I want to get across to you guys is that if I'm assuming an orderly downtrend, meaning lower highs and lower lows. So from a scalping point of view, obviously use discretion or just logic. But when you're setting your stops on your shorts, if you're scalping short, keep that in mind, that the medium time frame market structure, called, let's say, the 4-hour high before a breakdown or whatever the case may be, that should be theoretically quote unquote safe if we're going to have orderly downtrend price action. So just one thing to keep in mind: if you're trading with a trend, use market structure as invalidation. Yes, there's deviations, there's stop runs, etc. There's squeezes, but with the amount of liquidity in crypto, we really haven't seen those like giant stop runs yet that shake all the people out from their shorts, because again, prices are much lower than they were. So yeah.
So this guy, someone want to look at FXS.
FXS. Oh,
I mean,
remember had an edge.
My first thought is like, everyone's trying to long it again. the whole way down. I haven't looked at a chart on this, but I know it's basically like a liquid.
It had an edge to edge, and it broke down from it multiple times. This is bearish Ichimoku. I think, but so yeah, I think everyone's still longing this. This is probably good for short, whatever, but this is an interesting accumulation range. However, given my thought on BTC, I will not be surprised to see these lows swept. 3.9. I think I actually have alert somewhere there. Yeah, when it does get swept. But to that point, yeah,
there's like 15 million in shorts. The bottom ones are around 5. I just heard you say 3.9, so that seems a lot lower. But you'll get to the exhaustion point down around 5, I guess. But like, where does it trade back up to? That I don't really know. I just don't really have any interest in trying to trade altcoins. One, because the liquidity is horrendous. Just looking at notional amounts on the deltas, and also just like how price moves, it's like you have to be so quick. Like,
you have to either be scalping it with very tight invalidation, or you're trying to short assets that are still overinflated, that you think are mispriced and overvalued currently, if you're shorting, obviously. You guys might have the opposite viewpoint, that everything's very bullish, about to go up only. That's great. Thank you for your exit liquidity.
AVAX. Someone wanted to look at AVAX.
All right, let's do a couple more AVAX. See, this is an alt one, so I'm just not interested in the alternative L1 trade right now.
I think they all broke, like they're close to breaking like
all-time lows.
Yeah, or the 22 lows at least. Yeah, so 85 million in shorts. I mean, $9.60. You maybe get some exhaustion points, but there's a lot of people trying to long this still. Yeah, this is a crazy ratio. So, and look, nothing's going to surprise me if it squeezes like a little bit. I just think that to get really excited, you need to reclaim some serious levels a lot higher. So my expectations are very much like range chop, like bleed, or it's I don't have like that much interest in trying to
I think the consensus view though
trade
is that
right now.
there it's going to be a rangy, choppy year, at least from the people we've spoken to. Is that it's going to be a rangy, choppy year, and because of that, I think the bull case is dead for the rest of the year, and that's why I prefer to take the contrarian view that it's just down only. I think that's the least expected. It was less expected. It was more expected back when we had the 24 or 25.2K move, and then we had that 24.8K move. People were calling for new lows, and then we kind of BlackRock ETF'd our way to 31K. But I think now that that whole thing has passed, we finally broke down from that lack of volatility. The range we're in for about a month or two. This to me screams down only. Downtrend has started. Trade with the trend. Use lower highs as invalidation. That doesn't mean short here, right? Either.
$300,000 trades on XRP and have zero problem with liquidity. XRP is probably a lot different than FXS and AVAX.
It's a top 3 major. I'd hope so. You wouldn't have issues with 300K of liquidity on XRP because that would be a very scary thing to use. But try doing 300K on OP and tell me how that goes. Tell me how long it takes you to get filled.
And then you put your stop and it's like,
and then you get slipped for 5%.
Horrible.
Good trade.
No interest.
All right, let's do Matic and then wrap up because someone asked about that a couple of times.
Someone asked about Ape. I'll look at Ape's liquidity just for fun. Yeah, 142 to 29. I mean, look, all these ratios are going to look really skewed, like to the, like, they may all squeeze, but where are they squeezing to? It's kind of hard to determine. So 65 million in shorts on Ape, whoever wanted to know that. I mean, it's I guess this one's not like as bad as the other ones. Your bottom wick is 139. You have like 100x one at 144. But I mean, like, just look right here. Squeeze. Okay. Squeeze down. Squeeze down.
That's what it is, right? Like this.
Right? So why is this going to change? This will just go out in time, and this will just be pushed back here. People will still be trying to long it, and you can continue to just do this, and that's fine. Like it's just not like.
So the real alpha here is figuring out where the pain points are when they do squeeze, and then being ready to short that back down, right? The interesting thing about a lot of these alts, and I'll show you as I look at Matic. Interesting thing on a lot of these alts is that they started their downtrend for a while now, whereas Bitcoin just kind of finally broke down from that range. We've just seen it start trending down for the last week or so. So it's interesting that a lot of these alts are already down pretty much, but don't ever blow it past you that this is the Matic chart on log. Who's to say we can't trade all the way back down in the rate to 4 cents? 91% lower. Never, discount the ability for your asset to be repriced much lower than your initial buys and all your future buys. So if we are starting a downtrend, there's going to be a lot of blood in alts. So I'd be looking to scalp short on alts, or I'd be looking to swing short on alts that I think are going to retrace a lot, like Rune, for example, OP, things that have pumped really well, even Tomo for that's actually a decent one. But point being is, so looking at Matic, just to give you your answer, we move this down to 50 cents. I think we have like a block here at like 30, 40 cents. I wouldn't be surprised to see this break down another 20% or so if BTC goes to 24.2, 23.6. Liquidity on Matic strip?
There's a fair amount of shorts building. So like 168 million. Got a lot of people trying to long it though.
That's all I see are green dots. Yeah, there's a little more red in there than the other charts, but
so you get exhausted around 51, I guess. But like there was exhaustion points on all these alts, and then like BTC and ETH decided to go like significantly lower. This all becomes irrelevant. It's just like plummet, right? You go look at the wicks on some of these exchanges. They're brutal. So in terms of liquidity, when I say like you get slipped, like, to Josh's point, like if there's not a lot of liquidity, then size down. Like don't trade your normal like amount in this environment. It's just, you're just asking to get like lit up especially in the altcoins.
Yeah, it's a good point. All right, last one, Tomo. This one I actually was looking to get short for a swing. Reason being is yearly open is at 25 cents, guys. And if Bitcoin's going to do what I think it might, it's a long way down from here, right? 82%. But let's not get too bearish, right? Let's be realistic. Tomo.
I don't know what
This was one of the strongest performers, right? Like this looks like an S&P chart, the way it was just going straight up. It's like the cleanest little trend line I've ever seen. But then you had the trend line break. So this to me was like the trend line break, and then your retest. Not as accurately drawn, but the point being is I do think we're putting in a top here. This was what looked to me like a little meme triangle potential breakout. Even looks like we're trying to flip that little level, but this is a descending triangle. This looks like a deviation to me. I don't think this holds. If I was a betting man, but not here, but something like this. Where's this? There. And then trading it back down to a sweep of these lows would not surprise me. Just because the strongest performers tend to become the strongest performers to the downside as well when the tides do shift. But yeah, I think that about wraps. Do we have anything on Tomo as liquidity-wise, Trip?
You definitely were building a lot of longs in this like area that you just talked about, and
it seemed distributive.
161. Yeah, this seems very distributed. You're just starting to build some shorts, but only 17 million. I mean, what were they here? Almost 40. So that's where you got to squeeze. So maybe
that was the descending triangle, the bottom basically, like that round, like straight bottom.
Like the 144 lows look pretty ripe to take, and then that would bring you back down to 138.
Yep. Then you basically break down from that descending triangle.
Yeah. That seems about right. So let's see. Are there any other ones? ARB? We'll look at ARB. I will look at ARB, and I'll look at Soul because I'm curious. Actually, I'm actually curious what Soul looks like. But we'll go in alphabetical order, and let's go to old ARB first. See what's going on.
There's
in ARB land.
Show everyone BOG so they know what not to do. I'm not sure what BOG is, but if it's an on-chain coin and it went to 0, I'm not surprised.
206.22. So, but yeah, the crazy thing is like people really want to long these altcoins.
Well, because it has the high beta, right? So it's like, okay, Bitcoin must have bottomed. Let me get long here, and they keep trying, and they martingale their way to death.
Yeah, like. Where's price right now on ARB?
95 cents.
Oh, wow. So, yeah, I don't know. I don't have a chart up of ARB, but it looks like everything else. Like,
yeah,
there are people.
You can make note of the relative strength of what's doing the best as we move down, but until we get into those levels on BTC and ETH that we mentioned, I wouldn't be keen to long anything. If the meta is buy alts when BTC bottoms, I don't think BTC has bottomed. Ergo, I would not be buying alts here. If you're scalping, I guess, but I still feel like the trend is down. So why are you trading against the trend rather than like shorting down, playing the liquidity itself? Shorting at the lick levels. Once it squeezes the shorts out, that's kind of where I want to get involved.
Yeah, I mean, so Soul, right? We had kind of been like looking at this zone, and that was basically your Tenkin, and it was holding the Kijun, and now like what? This is where. What is this yellow dot? The predicted Kijun level?
Yeah. No, it's the level at which the Kijun changes.
Okay. 1269.
So it'll stay as long as you don't sweep 1269.
Right, but
but it's a swing point. It's a swing low, essentially.
This was a breakout fail retest. So why is where this bounces, it just seems like it would go close to
bounce right here, or it falls out of the cloud and then it's starting a downtrend back down.
Right, falls out of the cloud. Right, that's the thing that most of these have done, right? And it just makes it really obvious that the trend, was exhausted and kind of died. So it's, I guess, well, let's actually just pull a fib on this to see where, if you were to just do our, like, what is the retracement? I always do this wrong, so I apologize. Off of this high, which was 34, that's where it got to?
34 to, or 32 to, no, it was 34. 32, yeah, 32 to
so
1280.
All right, I mean, you're at like the 61.8 retracement on this, okay? So there are a lot of shorts in it. Look, I'm not going to be surprised if these things squeeze a little bit, but I would say that it's probably a shorting.
I would be, just because I don't expect them to squeeze without BTC squeezing or putting it at the bottom, right? Alts, at least the majors, tend to wait for Bitcoin to make their move before they decide to, like, creep up and show their beta. So until BTC goes to where I think it's going to go, I don't really expect these alts to bounce. Like, yeah, you have the 9 coming up tomorrow, right? But who knows? Maybe it's a giant 9 that goes below $10. You know what I mean?
Yeah, I mean, this is your setup trend line, 1480. But I guess it's like, if BTC squeezes to the 12-hour liquidity pocket at 26.2 or something like that, this will squeeze, like, all these alts, the delta
Okay.
start to flip.
That's
it's
fair.
just you have to take a view on the market of what. So to your point, then yes, I agree that the liquidity analysis can be deceiving when they're not necessarily in the driver's seat and there's not, like, really a lot of participation for those things, for like an anomaly to happen.
Unless there's those extremes of, like, negative funding and you have the short buildup, right? Like we saw on Rune, Bluezell, LPT, things like that. That's when you combine all your sentiment factors, the liquidity analysis we were just talking about. You look at your funding, you look at market structure, and you kind of compare that to where the rest of the market is. And just assume it'll probably outperform Bitcoin, but it won't be immune to whatever Bitcoin ends up doing. So one question we had before we wrap up here, Ryan asks, why does every chart follow BTC by the millisecond? Well, because it's all correlated, man. You're trading a crypto market. A lot of these just algos and traders in general, if Bitcoin starts thumping, they start selling their alts. Bitcoin starts going up, they start buying their alts. It's a game, or a tale as old as time. It used to be a fun game to figure out, if Bitcoin pumps, do alts dump, wait, or bump with them? And it's changed over the years, but point being is it tracks it by the millisecond because they're highly correlated assets. So to answer your question, but yeah, I think that about wraps things up for today, guys. We looked at a ton of stuff. We looked at macro, we talked about Bitcoin, we looked at ETH, we looked at a bunch of liquidity analysis, a few alts, some on-chain things. We talked about Friendtech, talked about a ton of stuff today, guys. Any parting thoughts here, Trip, before we wrap up?
Not really. I don't think you're going to see much activity really before Friday, because it's like just the market's kind of waiting on that. I'm not necessarily sure that crypto is going to react the same way as risk assets, like even if it was like a positive thing, just because the overhang for crypto right now is very apparent. So be disciplined with your scalping approach. I would say size down, investigate some on-chain stuff. We might put more in the Telegram. I'm not sure. I have somewhat of a moral compass, so I don't. So, like,
It's tough, depending on the market cap of things too.
Yeah, my investing in on-chain stuff might not be suitable for everyone, but yeah, I would just say that, like, when you get an event like this, just be patient and pick out the variables that you want to see, and when they match up, then shoot your shot and manage your risk accordingly. But we'll continue to put out all the analysis in the Telegram and, like, keep you guys posted with stuff. But don't force trades in this environment is the main thing.
That. Any last thoughts on what do you think the outcome of Jackson Hole is going to be? That was actually my question for you personally.
I don't think you're going to hear anything earth-shattering. Market builds up events.
How do you? So I'm going to just one more time. What do we think? What do we think happens here? DXY at resistance. Does it break out? Does it just Darth Maul? That I think that's my bigger question for you personally. That I'm actually curious of. Gun to your head, DXY, is it breaking out on Friday or is it faking out?
If from a technical standpoint, just trading TD, if it basically like invalidates the recent 9, it's probably going to go up, and it could go up, fake out, and come back down. But I don't think it's going to be like a huge like mover, in my opinion. It also has gone straight up
That's
for
fair. Yeah, that's
for a
fair.
while.
Yeah,
So I guess I would wait. I wouldn't try to guess it.
that's good. That's good, right? We are traders. We react. We don't anticipate. That's a great way to end the stream, guys. So with that, we'll cut it right there. It was a perfect way.
Yeah.
All right, guys. Thanks for tuning in, and we'll see you all next week. Captain Cole signing out.
Later, guys.